Good morning, everybody, and welcome to today's episode of Market Check. I am Snorlax, your host, aka Tommy, as you guys also know me. But today is a special market check as we have our usual cast of characters in Max Tucker and Dr. Will's Outlook, but we're also joined by a special guest in Trader Jackus. So I wanted to give a big welcome to him, and we're looking forward to getting his thoughts, I know, on the market. As well as everybody else on the panel, right? I mean, it's, I feel like the title of this episode is very appropriate, right? Bitcoin to nuke or to not. But, as we sit on support, I can't help but be reminded that this low volatility range that we're kind of seeing on Bitcoin sure does look a lot like a repeat of that structure that we saw in Q1, right? Where we formed that second top within the structure, right? Because in Q1, Bitcoin had two different tops. It had the first one, I think, that went to about, like 22, 23K. And then the second one that went to about 25. And then after that, only after that, you saw the much deeper dip. And I think that we could be, within that leg of going to a deeper dip, right? Or, is this going to hold support for the rest of the week, the rest of the month? And start to really carve out a range here into September. That was kind of what I expected over the last few days, but I'll be honest, the more we've just kind of sat here in this very low volatility range, it's ultimately indicative that there has been probably a lack of demand. Maybe not just demand, but ultimately participants. And I think that's kind of a theme that I'm seeing throughout the market, especially in markets that have previously been outperforming. And this was kind of, what really set off some alarm bells in my head yesterday was an on-chain bag that I've been trading very, very well for the last 3 or 4 months. I've made a good amount of money on it. And it had a very big catalyst that it announced that should have really pumped price. The setup on the chart also looked phenomenal, but after the announcement, the first 15 to 20 minutes, there were only 3 transactions total on that pair. And this is not a $1, $2, $3 million market cap. This is a lot larger than that. And when I pair that with kind of what I'm seeing in some other on-chain markets, right? You look at Unibot, you look at Rollbit, they aren't necessarily inspiring strength, especially Unibot, which I think has really been like the leader of shitcoin summer. Right. Given how people have been using it to speculate on-chain activity. But yeah, no, guys, I think I was hoping that we would have a bit more of a range carved out here, but I think this is more of a potentially bearish low vol into a bleed that we could see. But I guess we'll see. It ultimately really does come down to 3 things, in my opinion. The first, obviously, equities, legacy markets, that goes without saying. If they can get a strong bounce here, then maybe that provides some hope for crypto. If they nuke further, it's definitely not going to be good for crypto. And then I think the other 2 things that you have to monitor, one is probably the elephant in the room, which is Binance. How does that resolve? Who knows whether the extent of Binance's solvency. I'm not going to speculate on that. Although I will say personally, I don't think they're fully insolvent. I don't think this is an FTX situation. And if they aren't fully insolvent, then why should they fill the entire, inefficiency below us? So I don't know what the Binance thing would look like, period. Let me just say that. But you can clearly see the impact that Binance teetering on support has had on the market by looking at funding rates and by looking at the price action on a lot of these altcoins. You can tell that Binance, especially the exchange, there is a lot of selling of altcoin inventory going on over there. And you are seeing it reflected in the price this morning. And then the last one that I would say is CRV, which it was funny because we brought it up on the show, I think yesterday, or it might've been Friday of last week, about, people completely forgot that was a thing because of Binance, right? They're kind of distracted and maybe even a little bit complacent over the fact that, the CRV liquidation issue never really went away. They did lower their price, and they ultimately had, they were able to, they're basically able to lower the yeah, lower the liquidation price, and you would hope create a bounce on CRV. But imagine that you you basically put in 2 or 3 times the amount of circulating supply in order to over the counter to people to save your token. It's basically an admission that your token over a higher time frame is going to zero. What do you expect from buyers in the immediate term? Do you think they're going to buy CRV just because the danger in the immediate term has subsided? I guess that's what they were hoping. But it doesn't appear like that's the case. And we are getting close now. We're about 10% away from that over the counter price, which is 40 cents. And I do not know what's going to happen when we start trading around it. Although I will say you have already seen some sophisticated actors in this market move their CRV to exchanges, presumably to sell. But I'm sure they'll come up with whatever, like, oh, we need it as collateral or something like that. But yeah, no, it's a very interesting time for Bitcoin. I've already gone on a long enough rant here to start the show. I want to get this opened up and let's look at some charts. I'd love to get your thoughts on what you're seeing, Jackus. Welcome to the show. We're really stoked to have you.
Yo, yo, yo. Happy to be here. Couldn't find the mute button. Yeah, I suppose we can start once again with BTC and what do I feel here. So let me share it like this and then put on some perp chart, right? So let's try Bybit, for example. And I think this should be, everyone should take this into account as a first thing, where we had this huge liquidation event as we finally got some movement for one day, hooray, and then back to the chop. But yeah, the spot markets basically didn't take the June low, and a lot of perp markets has, which says that there was a lot of leverage during this chop, betting on obviously both sides. There are people betting on down, there are people betting on up, and so when these liquidations hit, then obviously the perp chart went lower. But my point here is that usually when we see that, and especially when it's like lined up with some important level, which 25k obviously is, then what we usually see is the market that tends to fill these. It's not like something that needs to happen, but it's definitely something that I've seen happen often. And therefore, I could see BTC filling, like the spot pairs filling these wicks and dropping below the June low.
What was the low of that Bybit perps wick, Jackus? Like, what did that wick to?
20. This one?
Yeah. How much lower did it go on perps than spot?
On Bybit, it went 24,200.
Wow.
This one, yeah.
Yeah.
So that's nearly 1,000 difference. Pretty crazy.
Wow.
Yeah, and like sometimes you see that, and if it happens, for example, like here, right? If the perp chart went lower here on the absolute bottom, or like here, then it wouldn't, in my opinion, matter that much. But the fact that it happened in a confluence with this June low, usually the market wants to fill that. So that's something definitely people should keep in mind. Then the other thing is the basic, 200 MA. Like, you may want to laugh at MAs all you want, but in my opinion, they are a pretty powerful tool anyway. And if we look at it, we've just closed both the daily and weekly below, which obviously sometimes can be a fake out, like many things. But it's after losing it, if we don't see a buyback here that goes like into sort of higher lows, higher highs, in this inefficiency, if we don't see this, then you like it adds the confluences for the downside here, especially with what I talked about before. And if you look at the if you look at the past cycles, we have usually after the bear market, when we reclaim the trend again, we mostly stayed above the 200. Like obviously we haven't done that in the after 2018. Like we did, but this one was so quick that we stayed even above the 50 daily moving average. Like this is the 50 200. But after we've reclaimed it after March, we've stayed sufficiently above as well. So the fact that after this bear market, we reclaimed it and now we are below again, this just tells you how oversold this cycle is, how long it is. Like all of this, right? Just way longer than all the past ones. If we just basically look at it this way, right? It's pretty damn long. And then wherever you, even if you calculate the top from here, yeah.
Could you repeat that part again? I didn't hear that. How over what?
Apologies if my mic died. Yeah, I was just saying. Yeah, I was just saying that like this cycle is really lengthy. Like the pain.
But you were saying it was oversold,
suffering.
right?
Yeah, I was saying that it's like comparing to the past cycles. I'm just saying that we are like really oversold overall in where we are, because in the past ones, usually after we reclaimed the MAs, we tended to grow with them, come back, retest, go higher lows, higher highs. But this one we've lost it again, which shouldn't be taken lightly. And I think we could see another downside, but it will matter how we move around here. And I think another important tool to look at is the RSI, basically, where the daily RSI, where if we look at the like all history, whenever we've been around these levels, this heavily oversold, it's usually a place where people tend to get a lot of bearish and start to short a lot, and it doesn't matter. It doesn't mean like straight reversal, but usually sooner or later we see that upside. So people that are heavily shorting here should be aware of that.
Jackus, can I let me point out one spot on the RSI to you, just for fun, just to tease, you don't even need me to point it out. You already got it. But if you zoom in there, you can see that even after we were at these historically oversold levels, we still dropped like 30%. So for me, the RSI really only matters in the context of a divergence that comes out of it, not the naked print, because the naked print itself.
I totally agree with you, and I keep saying that, but people usually don't want to hear it. Like it doesn't matter what you use. Everything is just part of the overall picture, and it's exactly like here, as you pointed out well, because the RSI was oversold right here, right? And it's good that you pointed it out, and it's the greater part of the confluence where we had this 6K base back then, and then we broken it, and then obviously the price tended to keep getting sold off, but it was at the confluence of like the bear market still being halfway through and so on. So as you precisely mentioned, it's never about like one thing. You need to try to see the overall picture. So like, for example, had this happened here, and it sort of did, right? Because we've broken here, and then we got pretty oversold, but at least we got a bounce right before the continuation. But once again, it's about the overall stuff. I'm just saying that you shouldn't underestimate it, because especially if you are short here, then I think the downside is pretty limited here. And yeah,
I mean, I would agree with you. Like we've talked about this before on this show. The meat of the move is over. Like if you're shorting here, you could make money, but a majority of the short, in my opinion, has probably come and gone. And if you're shorting down here, and it's a new position for you and you're not compounding from higher, it can be incredibly risky because we are technically very oversold on most time frames, almost every single time frame.
That's exactly what I've been heading to, right? Like I'm not saying downside isn't possible, but like I think for your average retail, that context is very important.
Yeah.
Right.
Yeah, you shouldn't be opening up like brand new shorts on Bitcoin here. You could maybe short certain altcoins. There's certain altcoins that bounced overnight or something. Like OP is one that comes to mind where Bitcoin's going to sell off, altcoins are going to sell off.
I have
exponentially more difficult.
What about here's a thought, guys. What if the ultimate thing that is going to hold here is not going to be Bitcoin, but it's going to be BNB? Like, what if Binance coin is not going to sell as deep as some people think because everything else is going to be sold to protect it, and Bitcoin will go if that's the case. And I would probably, if that were the case, I think that's like the 21K scenario type of thing. And that's even still like that means you probably missed basically half the move on Bitcoin already. So I mean, I agree with what you're saying. I just wanted to pose that thought as well.
By the way, when we are talking about BNB, isn't it sort of like reversed FOMO right now? Like everyone, just want to jump on this short and ride it all the way down here. Like everyone saw FTT collapse, and they are like saying, "Oh, this is totally the same as FTT, and I'm gonna just short it here, and we are going down to $50." Isn't it a reverse FOMO sort of kicking in the market
full on degeneracy at a different level, right? Like it's actually, and this is what I keep telling people when they're like, "Oh, short BNB," because every time the market drops, it's like everybody all eyes on BNB, right? And it's actually causing reverse FOMO.
But it's the only ticker that didn't lose its bull market range low. Like you have to look at it and go, okay, so what Tommy said is very relevant, right? Like they're clearly distributing other altcoins to prop up the price of BNB, and I would argue they've been doing that for about a year now. Do they ever run out of ammo? That's kind of where I think this thing comes to a head, truthfully.
But is it not profitable to continue to bid this? Because if you think about it, if everybody's down in shorts at the lows continuously, it's actually more profitable to dump money in, lose money on that position just to be able to liquidate all those positions and take that money.
Like I wouldn't short BNB. I mean, I hear what you're saying, right? Like we've talked about staying away from shorting BNB specifically because of who you're trading against. You're trading against the Godfather right now, man. I mean, he could squeeze this thing 30% in one candle just because he puts out a tweet or he says something like that. That could and probably will happen if things get really drastic. But it's just the unknown. Like, look at Jackass's chart. It's like, what potentially lies underneath that blue box right there? Is there some sort of under collateralized loan that's going to be subject to liquidation? And you could only hope at that point it's the type of on-chain liquidation we know about right away and not some sort of liquidation where they end up in court for 2 years, because that's the one that could cripple and bring the industry to its knees, truthfully. And real quick, before we continue on with this discussion, we got 36 people liking. We already got to 20 likes. Our goal every single time is 30 likes, and you guys always seem to do it for us. We need 10 more people to like this video. If you guys are enjoying the stream, if you're enjoying having Jackass on the stream with us, please help boost the channel. Get us to 30 likes on the video. It really helps the robot take a liking to us over at YouTube headquarters. So thank you guys so much for spending your Tuesday with us here as we have special guest Jackass showing us his charts. But yeah, I mean, I think it's just a lot of the unknown, guys, of like
ETH looks horrible.
Yeah, I was gonna say ETH looks bad, man.
And if you look at ETH BNB, or I'm sorry, if you look at ETH BTC, perfect confluence on local range.
I wonder what ETH BNB looks like, man.
You know what
wait, guys.
Punish bull sellers, man.
Okay, like this level on ETH has just insane amount of confluence, and I think it's gonna be defended because like we have, oh shit, I used the wrong tool. Where are you? Motherfucker, here. So it has this channel inside, okay. It has this inside channel inside. It has this demand zone, which was the impulsive move that broken the structure here, a retest, and you have the like overall higher time frame triangle there. And I found it absolutely incredible that like all of these are meeting right here, and that's exactly where the price stopped. And I think should we dip below this level, that would be fucking bad.
Jackus, let me ask you this.
No,
So if you were to invert that ETH chart right there,
Yeah.
that's technically a bearish pattern. Or like, I mean bullish, right? Because it's inverted, but like that would be like kind of the normie bull flag. Like that should break to the upside in theory. Like we shouldn't, like more times than not, that's going to break up.
It looks like
continuing to pressure down.
But it depends.
That depends liquidity above it.
But you see, because what I see is let's talk inverted, right? So I see a supply retest. Like here, we took stops, right? We broken structure. We baited here, created liquidity above. Yeah. We went above, filled the inefficiency, retested the supply, took the stops with all this confluence, and then we closed below on the fucking 3-day weekly, whatever, all of those. And
there's
now,
a lot of confluence there. Like
there's a lot of confluence, and I think that this level should be defended, and we shouldn't be going. Okay, I'm gonna invert back because it can get confusing.
Shouldn't be going below that.
We shouldn't be going below that, in my opinion, because if we do, then I think it's fucked. We are fucked.
Okay, so let's entertain both scenarios. Let's entertain both scenarios just for fun. So if we hold there, let's just say we backfill that wick and we go down to the blue box, which is demand.
Definitely.
Or 3-day order block, so it's demand down there. What would you expect off of that level? And then also, if we lose that level, what would you expect?
I cannot really say what would happen if we lose that. I think okay, we could lose that. What could happen is actually this one, okay? As long as we sweep this level, we bait the breakdown, and then we sort of retest it. That can happen, and I've actually played this on Atom back in the day. If I put in
so ultimately a bull trap is what your idea is here, which is what mine is on a lot of charts. Or bear trap,
yeah. So we've seen the exact same thing, right, on the logarithmic chart. They baited the breakdown here in summer 21.
Wow, that really.
Yeah.
The thing is it never came back and gave it to him either. It just completely liquidated him from there.
Yeah.
Like they had no chance to get out.
Yeah. And yeah, so this one is still doable, but I think like we shouldn't be losing on a closing basis. I think if we close below, then like it's over. That would be really bad. Okay, below there, I say it's below. It's really bad. But for now, it's pretty much like during COVID. People also on BTC, right? People also were scared. And in reality, what we did was that we retested this, basically this bottom accumulation like pretty precisely. And if you look back, it always looks so clean and spot on. And I think that could be the case here. But yeah, if we lose that, that's bad. But the amount of confluence on this level is pretty damn big.
It kind of, if I were trading that like a lower time frame chart, the high time frame ETH chart, I would kind of be expecting a wick down into like 1100, 1300 area, and then a strong bounce from that level.
1300, like here.
So that demand right there, Jack, is see the demand from November, December. Like if you were to wick like into that, that's really strong demand in my opinion.
If you look at Jackus's chart too, that also follows the normie trend up, right? You got the higher low structure continuing to build at that point, and you're good. But if you break down to like down there where you guys are talking, like I would arguably say your uptrend structure is gone.
Yeah,
right?
But I would say you're not even in an uptrend. I would say you're still in just a range.
I mean, those are higher lows. Those are higher lows.
An uptrending structure yet. It looks like
I tend to agree with Will that I think if we go down here, it's basically like when BTC basically like when BTC went down here. I would say it's the same. The moment we break below is where we bounce like here, right? We create some structure. It doesn't mean like we are instantly going to zero.
You can retest, but you're going down.
Yeah, exactly. I think that's a very good point. That if we break below here, we've lost the structure because, okay, I'm gonna clean this shit now so it's clean. And then basically, if we lose that level, we are below the mid range, and then this is the demand you are talking about, and then we retest it. Sure, we do some shitty.
You would bounce that demand for sure, but you would definitely continue down from there.
Yeah,
in
my
perspective.
You need that deviation on the other side of the range there, brother.
Wouldn't Wabi have to shave
down around 800?
Wabi has to shave his face if ETH makes new lows.
So, in my opinion,
I think he said he'd shave everything, man. I think he said he'd shave the hair and everything.
I agree, Jack, because I think this is the make or break zone, right? You got to retest that wick, and you can't go below.
Yeah, and I also think that Ether can stay sort of strong here while BTC can go lower. And it could result in what we talked about, like fill half of the wick or even dip below it, but just dip and sweep and then go up. But we shouldn't be losing it, in my opinion, because of all the confluence we talked about.
The funny part is like this is why I look at this, and I remember 2019 very, very vividly, right? And I can remember everybody telling me how it's over, right? And how we're going to go deeper. And you had similar structures forming in 19 that you have forming right now. And again, you got to remember we're coming into the halving, which I know some people like halving doesn't matter. I'm telling you, look, money wouldn't have moved in when it moved in if halving didn't matter. It moved in exactly on cycle timing. Exactly on cycle timing. So like these structures are indicative of a continuation pattern until they break, right? If they break, then that continuation pattern is broken.
I still have a thing that I'm sort of comfy, and I think the EM analysis is gonna play out, and then, okay, let me put on the when the chart because it's without weekends, and then I think what's gonna happen here is that silver, because the BTC is EM correlated, as I was explaining, with silver and other macro assets. And then what I think is gonna happen here is that silver is sooner or later gonna retest this demand confluent with the range lows, and I think it's gonna head higher afterwards. I think people shouldn't. I think there could be a high agreement amongst people that silver is gonna head higher. And if there is a high agreement that silver should be heading higher, then you need to expect the same for BTC, unless there is some code in the bug and BTC goes to zero, then you should be expecting BTC to follow. And that level is right here. If there is further drop, in my opinion.
That was actually the level I've kind of been thinking since last night that we could revisit. I think Max has been looking at that same level though, right?
Yeah, but
I have been. There's a lot of people don't trade off of these. They think it doesn't matter because Bitcoin's a 24-hour market, obviously. But the CME futures gaps for Bitcoin and ETH actually, they carry a tremendous amount of weight, and there's like a 90% fill over a long enough period of time. So yeah, I mean, Jackus, you got it marked out. Like I think that CME futures gap at 21K is going to get filled before next halving. So I mean, that's truthfully like that's my shove spot. Like if we get a capitulation, or another liquidation event, like I am shoving for next cycle at that gap. Like I think that's probably going to be your final retest.
So I want to point out one thing real quick before we move forward from that conversation. Arguably, I would almost say we're kind of in a similar situation here with Bitcoin as we are with Ethereum. I think you break below that 25K zone, you're gonna drop substantially, right? Your trend has almost, I would say, reversed. So like if you were to pull up Bitcoin real quick and just look at that double top resistance there, I don't think you're getting back above that if you break into that 21, like not there. So in the midpoint, kind of where we're hovering at 25K. If you were to draw a line right across 25K,
yeah,
all the way across, you've got heavy resistance there. So like if you break below that, arguably you'll come back up and retest, but do you break back through? Right, that's the question. Or do you deflect and come back down to the lows? And that's why I said, like, this is your make or break point here.
We're not leaving that CME gap at 21, guys. Like that's gonna get
I disagree with both. I disagree with both. Okay. First, we can break, in my opinion, below here because this was the impulsive luck. Okay, this one was 2, but this one took stops and then we are going back. But this one is the major one, and in my opinion, we can break below this one, fake below and still be okay. And
a fake, I can agree with that.
Yeah, I think we can, as long as we are not losing this one. I think it's sort of alrighty. But and I also agree, sort of, that we can go and fill this one, but we don't have to. And if there is something that BTC has done each cycle, and I was saying that back here, is that it each cycle it will always leave. It will always leave gaps below us, support untested below us, inefficiencies below us, and so forth. And like here, everyone was waiting that we're gonna retest, 14K and 12K and 10K, and it didn't come. And maybe, sure, maybe
it hasn't come yet.
Yeah, exactly. but like, I've been in the space.
Well, there's a gap all the way down to 10K, and that's what a lot of people don't realize. Like there is a gap at 10K.
No, that was partially mitigated. That one we did wick into that. I'm telling you that it was. We don't need a full fill, but there was a wick into it. Yes.
I mean, it touched the top. Yeah,
but partial mitigation counts for in my book. It doesn't need to be a full fill.
I think if we do get a puke that substantial to where you take out that low, I mean, in this hypothetical, you're going to like 21, 22K. You need to see immediately spot the step in and be buyers for the angle to come in that you're about to start like pushing shorts on a squeeze. Otherwise, I think what's going to happen if you do get that deep is I think then you do see it go sideways at that point, right? Like I don't even know how much more volatility the market would have left in it.
Yeah.
I just want to point out that like there is not much difference between like actual gap on the CME chart and these inefficiencies, because in a way FVGs is basically the same. And here people also expected back here, been going through it live every day, and people were expecting this to get filled, this support to get retested. Fucking ICT still waiting for a sweep of these 2 lows, and he's been waiting for it since 2016. He was saying, hey, I'm not like trying to put him off. I'm just saying that the market always tends to leave something on the downside that it never revisits. It never revisited these 2 lows. It never filled this one. It never filled this gap. It never filled this one, and so forth. And it might never retouch this support. And I was saying that back here that it's possible. We don't know. Here it came all the way down, and
I mean, you've got the FVG down like that impulse candle from 16K, right? Like it could leave that, you know what I mean? And it could come get that 21 zone, leave the wick at 19, still be leaving some things behind.
Do you have a halvings indicator there, Jackus?
Halvings?
Yeah. Can you just throw up a halvings indicator real quick?
I want to show you one thing as well, Jackus, about
and
that.
Then can you pull up the
high
current
that never got retested?
The current one
incoming.
Is May 24. So let me just put it like this. It's good. Maybe I'll make it.
So if you look at all those going into the halving, I mean, look at the pattern. I would say from 16 to 17. I wouldn't go off the COVID. I would go off something like that. And if you look at that kind of where we are now, that looks very, very much like what we're doing right now. Right.
Well, that's the only one that dumped after the halving.
Yeah, but it didn't dump below where we would be right now. Right. It dumped back to where we are right now. That's where it dumped to.
What Will is saying that we
that would go up.
We go up and then there's halving, and we, for example, well, maybe I've over exaggerated this, but like
you just kind of retested the same range.
I could see us way higher than we are right now, like going into the halving, and I think that would be something that we need to have happen because it will put too much pressure on Bitcoin miners if we're sitting well under 30K going into the halving, as their block rewards get cut in half. They're going to be extremely unprofitable if the price of a Bitcoin is not above 30K. So I would hope that that's the case. But one thing I wanted to just quickly show you, and then we'll go back to Jackus's chart. This is Bitcoin adjusted for the M2 money supply.
Yeah,
let me remove these, and it's very interesting to see, how we actually did come back, to this level. Well, if you adjust for M2, so just something interesting, because like one of the main long-term theses around Bitcoin is, it's basically a hedge against the debasement of fiat currencies. So if you take into consideration Bitcoin denominated in, fiat, but you adjust for the increase in the supply, or I guess now the decrease, right? We did come back and actually fill in this level. We didn't, however, on the example that you gave over here, Jackus, this one definitely like stands out, like we never came back right here. But yeah, I found this interesting,
For sure. I absolutely love it comparing BTC against like many other assets or valuations than just the dollar, because that can be highly misleading. And the measurement against the M2 money supply is just perfect. I use it a lot. I actually have against the M1 money supply, and I tend to show it as well, and it's pretty crazy because it's okay. So first of all, it's crazy how well it does respect the levels.
That's like, wild.
Wow. Yeah, like if you look at this, right, and then
looks like it's close to a breakout from the way that's set up.
Yeah. I'm like, this is, by the way, why you should also expect the breakout, because like, let's say we go below, it's probably over.
Mm-hmm.
And also I think what we can assume or read from this chart is that we basically didn't have a cycle of adoption on its own for BTC since 2017. Like this cycle was just money printing, but there was no adoption. If you look at all the past cycles, right, they were all adoption cycles. I'm on the logarithmic chart now, and this one was the first one that didn't really break its past cycle all-time high. And I think decent amount of information should be read from this too. But yeah, I'm also betting that we probably here we can sweep this low, retest this level. It was pretty important one too.
Jackus, do you think that we're going to have another like true adoption cycle of Bitcoin that would cause us to break out of this accumulation?
Yes. I think it's going to come with the, actually it's pretty crazy. I don't know if you guys heard of it. I just heard about it like 2 days ago. But so some bill in Europe passed that banks will be allowed to hold 2% of their assets in crypto. Like I haven't
That'll
researched
more than likely
it.
be Ethereum and Bitcoin if that's the case.
Yeah, most likely, but it's a start, That's how it always starts.
100%. Yeah, for sure.
You go slowly, and then. So I think the another adoption cycle happens with obviously the ETFs and all these banks coming in and institutions. Maybe later on pension funds getting in. I think that's going to be the next adoption cycle. Maybe like the major last. and then just the end. But I don't think that another adoption cycle for BTC is coming from people. Like
you
regular.
You don't think it'll be retail driven? It'll be institutions.
Yes, I think the retail cycles are gone now. Surely, like with maybe with low caps and so on, but like for Bitcoin and Ether, it's over with retail. That's basically been Nasdaq prior to 2000 sort of retail stuff, but I think after it's mainly institutions, and I think it's gonna be the same with Ether. By the way,
yeah,
I still think
I
that
was just
yeah. Go on.
Go ahead. I was just gonna say with Ethereum that's kind of been my thought on Ethereum. This is why I've kind of, I don't care anymore about it because like I think it's already institutionally kind of bought up, right? More in the aspect of stability, and now your upside is very capped because you're going to continue to keep getting capped on ETH.
I cannot help it but still show this fractal with Nasdaq that I was showing you, Max. I think
that's a good one.
All people should see it, and I don't think it's a coincidence. I just have a hard time believing it.
And the prices, how they line up, is spooky too. Like, that's even weirder. Yeah.
So this was Ether prior to the past cycle, and this was Nasdaq during the 00s, and then the bust, the .com bubble popped, and then if we look on the left on Ether, it went up to 4,950 and then dropped to 880. And if you look at Nasdaq, 20 years earlier, it went to 4,820 and then dropped to 810. It's like, these line up both in the scale percentage drop and the numbers, and also basically, if you look at it, I think Ether is a bit faster than Nasdaq, but like there was this huge upside, then the quick sell-off, and then we are sort of here. And I think right now we are inside of this. Right now, this sell-off is sort of like, I don't know, maybe we are here and maybe we are here. You shouldn't look at it.
Can you measure the Nasdaq off of the low that it set, to the left? What percentage did it rally to the local top before the drop?
I'll use this one or this one.
Yeah, so that one to like the next high before the sell-off. So like right there. Oh, sorry, I meant like within like the bear market still. So like,
yeah.
Well, that's fun to look at, but I meant like.
Yeah, so it went 15 or 1,500%, and that if we apply that for Ether, that would be, and it really would matter where we bottom, but let's say we bottomed right here, then Jesus.
Oh wow.
Yeah.
Okay, that is
exciting.
Over how many years did that take place for the Nasdaq? Right, what's the actual? So it'd be a little over a decade.
Yeah, that would probably be like 4 years in crypto,
because things happen so much faster in crypto. It's like,
yeah.
I do want to point out real quick, like that when you I've done this with actually quite a few different charts. It's kind of weird, but when you take log off, a lot of things tend to line up, right? When you overlay them. So like, I don't know. Like that's what I've noticed with a lot of charts. I'm not saying like this can't play out, but like a lot of the time I've noticed like I've gotten very misleading charts sometimes with log off.
I really don't think I'm log very much anymore, Will. I completely agree with you.
Yeah, but you still cannot I totally agree with you guys, and you can make also look fractals unless you look for specific things. You can make fractals look same many times, even if they are.
That's why I say don't massage them. Leave them alone if you're going to say it's a fractal.
I think
always massage will.
Fractals is all about, price action always does replicate because human emotions are similar. You just have to be able to make sure that the emotions that you are trying to project through the fractal are similar to the current conditions, right, that you're applying them to. And I think that's the mistake that most people make is they just overlay. I mean, they might have one of the two, which is like, oh, I felt similar that I did here, or this price action looks similar as it did here. But it's rare that you have, kind of your feelings of how you interpreted, you know what I'm saying, right? Where you have both, right? Where you can say confidently, like, okay, I felt this feeling before, and I've seen this price action before. And because those are both lining up, I feel pretty confident with where I think price is going in the short term or something, or whatever time frame that you're trading on.
Yeah, that's just intuition, right? That's knowing what you're looking at and intuition on knowing direction from that intuition. That's a little bit different than the massaged fractals, Tucker.
People,
hey, Will.
Hey, we've got a professional masseuse here
right now. Actually,
I love fractals though. I mean, because it is at the end of the day, right? Like emotions on a chart, and they replay. So I found a lot of edge over the last 4 or 5 months in, recognizing those patterns. I feel like they've been all over the place this year. Maybe it's because the market's like particularly algo driven and dead, but I definitely feel like I can recognize a lot of things that we've seen this year to previous PA, like the dump, the dump we had last week. If you overlaid the price action from pre-December 4th, 2021, looks almost the exact same. And I can remember, when it was happening in the buildup of that nuke in 2021, what was so distinct about it was we kept chopping into demand. Like we would chop into demand, we'd rise out of it, it would get sold into, and eventually you can only, this is where I get the saying from, that you can only chop into support for so long before eventually you run out of support to chop into, and it gives out, which is exactly what happened last week. So I don't know. I mean, I didn't mean to get on like a little soapbox about fractals, but
I would have one good note for fractals, because I was playing with them a lot too, and what majority of people fail to use them is that they think they're gonna play out like indefinitely, and what they are good for is the next move, and you also need to measure where the fractal is happening. So if the fractal is happening right into resistance, then it's probably gonna play out differently. But if it's like something like this, like Ether with Nasdaq, then you want to understand where we are in the like cycle phase, and that you can sort of expect this upside to follow, but it doesn't have to be exactly the same. It can mean that we go like above this level on Ether, and then we can stay there for a while because, for example, we're gonna have problems in the economy in the world, and it doesn't need to go up like this because there are different conditions. But the fractals are very beneficial. Just understand they are for the next move, and if the confluence is lined up.
Jackus, I'd like to ask you a question about next cycle. So obviously it looks to be a pretty compelling case at a minimum that, Ethereum might be in the midst of a final drop before next cycle commences. And we spend a long time climbing back up, but ultimately we will reach a new all-time high and a pretty substantial one. Do you expect Ethereum to outperform Bitcoin next cycle?
Easy.
All right, walk me through it.
Okay, so I have two theses for Ether. I'm bullish on it, but I have also my invalidation. So this one, absolutely, I'll start with the bearish one, okay? Because it's pretty horrific, but it's good to have it in mind. And let me clean this to keep it simple. So we had the 2017 ICO phase, we had the bear market, and then we had the large accumulation. This is the base that needs to be defended forever. We can ever go back to that. If that happens, that's just fucking over.
What and if then, we retested it like its previous demand? You know, could we retest it and bounce out of it quickly?
Not anymore. Okay. There was a chance here, and I was saying that we either back here I was saying we either gonna front run it or we're gonna dig way further into it, and that would be cool. Like both would be alright. But now this entire thing is either a giant accumulation or it's a giant distribution, and we will find it out. For now, I still have way more beliefs that we're gonna see higher prices, but I'm also prepared that it's not gonna be the case. I think if we lose this weekly, monthly level, this monthly OB, then if we break below here, then it's fucking over, and like that's really over. If we break below, I cannot see a scenario where we break below one more time. When we had this low, it just completely breaks the macro market structure, and I would expect, like, if you look at Tezos, I don't know if you guys remember it, but it was exactly the same. It went up, and distribution, we broken below, and look at it. It always happens with these alts. Always over, always upside. And when you see this long distribution after, that's longer than anything before. It needs to break higher, which is possible, especially with Ether. But you should keep in mind that if we lose, like, I'm okay if we would, for example, go down here and sweep this low, which is cool, but we shouldn't be losing it. And then I obviously expect that we're gonna go for these highs.
Do you expect a new all-time high for ETH BTC next cycle?
Probably no.
I don't know about that huge wick. I don't know what that is. That's not on my chart, but
yeah, that's scam. We can call all-time high. Let's call all-time high here.
Yeah, that's fine.
Could be here, right? But the wick really doesn't matter that much. Could be this one though. And let's call it this one. So I think in the next cycle, we probably either, like, this is my thesis. If I go back here, then this is my thesis for long-lasting altcoin bull market. If we do go there, we sort of like keep making these, like what can happen, for example, is the impulsive leg, right? And then we get sort of another reaccumulation that's gonna take a year or something, and then this could happen possibly. I don't want to go too much into future because it's just so many things can happen. Right now, I still see this as a deviation below range low, impulsive leg, and then we are reaccumulating inside of this impulsive leg, filling the inefficiencies. Below each low, people are selling, and I see sooner or later we should break higher and go above this high. There really isn't much holding us down here anymore if we break higher. And then I think the next stop is inside of this wick.
So let's just say we go to 0.11 on the ETH BTC valuation, and the fractal that you showed of ETH versus NASDAQ implied that Ethereum could go, to maybe what, 12,000 to 15,000,
right? Something like that.
Yeah, give or take. I'm just trying to kind of forecast what next cycle could potentially look like. Again, no one will hold you to it. Just kind of having some fun speculating a little bit. But as we get close to the next Bitcoin halving, I think it can be a good exercise.
For sure. Yeah, I think this is completely reasonable that Ether like outperforms 80% BTC from these prices, and that's not something completely unreasonable. But once again, if this level is lost, then you should really sell all your Ether and just, in my opinion, just be done with it completely, because that would be bad. You shouldn't be holding below here, in my opinion. I know it's hard to imagine, but I tend to trust the charts. mostly they are right.
Yeah.
If not all the times.
So if ETH BTC, the valuation we're looking at right now, goes to 0.11, you could maybe assume if Bitcoin goes to 100K, then ETH would be at 11,000, give or take. So maybe
let's do that mental exercise, right? So
yeah.
Let's say that ETH from the current prices goes, well, let's say 15K, right? Okay, so that's 800% from
so Bitcoin would be at 160 then, basically, if it reached a valuation of above 0.1 or 0.11. Yeah.
Could be, yeah. Or Ether goes to 20K.
Then Bitcoin's at 200K. Yeah.
Yeah, no, really hard to say. Like these are mostly just like mental exercise that don't hold that much value. I've actually seen a good price projection that would make sense to me too, and that's where BTC sort of like does something here, right? Slower, could be slower, and then it breaks higher. It breaks above and retests this level. Then it bounces back, but never goes to retest these.
So that would be our equivalent of like 13K from last cycle. How we never retested it.
Yeah, could be, maybe. But it definitely does make sense to me too. And that's exactly why you need to look at how price approaches levels. When does them approach them? All of these matters. It's not just levels, but also how quickly does it move into these levels or so. And I think that's important. That for example on Ether BTC we are slowly moving inside of here. That we are not just like it would be completely different if we bounce here and then went straight back down. What could happen would be this. I think like essentially anything can happen. That's what I try to always say. Anything can happen anytime. Tomorrow a meteor can jump on Earth and everything can be done. But what are the odds, right? But but I try to live with this paradigm, and it served me well. And yeah. Also, I think at some point this one does break. Okay, this downtrend in the BTC volatility, I think it breaks at some point. Probably like by the end of the year, it probably breaks.
And you think that's going to be an expansion or a price appreciation of Bitcoin rather than a dump, I would assume?
Yeah, like obviously I'm hopeful for BTC, so I expect price appreciation, but it can also be, BTC just going to, I don't know, 1K and it's over. Could be. Like I just think it's low probabilities. I think BTC is here to stay and the probabilities are super high. Like but as always, you need to be aware of all possible scenarios. Definitely. Like
I think with volatility, it's a fundamentally misunderstood metric. And I also agree with you in the sense that when it does break out, I do think it's ultimately going to be a move to the upside, because what volatility measures that, like the most basic, simple way that you could possibly explain it to somebody is it's like movement away from the mean. And that would imply for Bitcoin, for it to be downside, you'd be betting on probably the complete collapse of the asset if
exactly
Bitcoin volatility were to really break out of that downtrend and see lower USD prices. So I think that's, technicals, purely technical. I think that's very improbable. That I would just expect the meltdown of Bitcoin as an asset, but
yeah.
That's why I kind of expect eventually when we start, doing multiples on Bitcoin again, or at least, we 50-60% return, right? Like think about how much easier it is, for example, to have 50 to 60% upside on Bitcoin versus 50 to 60% downside. That's basically the volatility argument for Bitcoin. If you could sum it up in a nutshell.
Yeah, like exactly. I couldn't agree more with what you said. It would really have to be over if the volatility breakout is down. Yeah. Like, not to mention that the miners, like, what's the average miner price right now? It can obviously trade below that for some time, as we have seen with gold, but it cannot trade there forever. So
Jackus, we actually had a question a while ago about what I believe you're showing right now. This is from Brandon C. Someone asked him where he's seeing middle of May for the halving prediction is marked on his charts. The next halving is going to be a little bit after that, about a month after that yellow line. It'll be in April. But what's your base case for Bitcoin? You're pushing right up, let's say, very end of Q4 this year, and then through Q1, as we're pushing up right against the next Bitcoin halving.
Like against this one, what do I think?
Yeah, like what do you see for price? As we get close to next April.
I just think, like, I wrote about this stuff back in 21 or 20. Yeah, back in 21. That I see. I think the halving is just way overestimated. As we go, the halving's impact is going to be diminishing with each cycle, and I think it's already very minor, in my opinion. And the next cycles will be determined by the core demand for BTC rather than the halvings themselves. I'm not like saying they are not important. They surely are. I'm just saying that people shouldn't necessarily be praying to the date of the halving, and that price can oscillate above, like you shouldn't be thinking, hey, this day is the halving, so this day, we moon or dump or whatever. I'm not really focused that much on the halving date anymore. I keep it in mind. It nicely lines up with the QE cycles and so forth, but I'm not really like thinking
Tucker,
something big.
Can you share your the analysis that you've done, before each Bitcoin halving? I think that's a really important thing to highlight is, historical movements, the year before a Bitcoin halving. And your last video on it was really great. But
yeah, let me let's see if it's on this one. No. Yeah, there it is. It's all saved. All right. All right. I hate when it does that. Okay. So,
and guys, thank you so much for being here. We have 50 people watching right now. If you guys are enjoying the stream so far, if you could just take one quick moment and smash that thumbs up button for us. We're at 36 likes right now. Usually after, once we're live, we always hit 30. That's usually our goal. Today, 36 is great so far. But yeah, if you guys could help run the range high of 40 likes, that would be absolutely fantastic. Thank you guys so much for being here with our special guest. I am Jackus, really good friend of the brand as well, and a very insightful financial mind. And of course, if you guys are new here, we run this show every single day. We are Because Bitcoin, and this show is Market Check. Every single day at about 10:30 a.m. Eastern time, we go live and have discussions just like this. We just sort of debate internally and discuss, try to contextualize where we are at in the market, where we might go next, show a lot of charts. We usually don't have guests on, but Jackus is a special guest. So, but yeah, please smash that thumbs up and consider subscribing if you're enjoying the content. But yeah, back to you, Tucker.
Yeah, so let me just, there was the top. Okay. So yeah, this is what I talked about in a video not too long ago. Basically, before every halving, we have a big correction, right? We had 50% here, 40 here, 53 here, excluding COVID, right? So, and I was speculating. I had to just change this because I think it's changed. I was speculating this drop would start from about 35K is how I had it drawn. I just changed it back to let's see. Maybe I didn't actually. There's the top. I'm just gonna go 40, right? 40 seems like a pretty safe bet, right? Okay,
so for every halving, like if you start at the first halving,
yeah, the first one's a little skewed. It happened only 98 days before. It was still 50% though. But then after that, it was 40%, 250 days before, 53%, 322 days before. So if we take the top as being in, right, it's 266 days before the halving. We should start a correction between 40 and 50%, basically. So I'm taking the conservative estimate as 40. We should bottom. Let's see, before the halving. Okay, I guess the timing of the bottom is interesting, but we should correct to about 19K. Basically, this implies us filling that USDC FUD wick, right? The timing of which we could run through. The timing of the bottoms, right? Let's just exclude COVID. Yeah, let's just exclude COVID. So the bottom was 168 days before. We're running it live, boys. We're running it live. The bottom was, where did I take this from? That was the top. Okay. I think it was here. Yeah, 175 days. Okay, so the bottom's usually about 175 or 170 days before. This one is a little skewed because Bitcoin was like $9, so we're not gonna. It's a little off, but yeah. So we should expect a bottom if we just extrapolate, right? It's not going to be perfect, but can we go backwards? Yeah. 168 days before gives you October, right?
So that would line up with the seasonality of Bitcoin being bearish through August and September, and then having basically that final dip into an accumulation before the next halving. And that would align basically perfectly with what happened before the previous three halvings, right?
Yeah, and that's what I've been saying is we should get a bottom in Q4. According to this, assuming the highs of the year in, which I think is a safe assumption now, that should basically fill the 19K wick by October is what this implies, right? It's not going to be perfect, but that is just what the exact extrapolation says. And then it should be up only. So that's the analysis there. But what do you guys think?
Yeah, I really like the analysis. That's why I prompted it, because it looks like from what Jack has shared on his charts, it looks like, Tucker, you might think that we go slightly deeper than Jackus. You're thinking we could go back to the teens, and I would imagine that implies ETH probably going down to like 1,000, maybe a little bit above 1,100, 1,200, something like that. But overall, it's pretty similar, expecting like a big dip into an accumulation and then expansion after that. So
yeah, I think that would be rough, man. That would be rough. That would probably be it would just be, that would be nasty. Maybe dip into like 23K, come back, retest 24, and then it would just probably do something like that. But then, obviously you get the nice.
Are you talking, Tommy?
I was going to say, I don't know that. I think that is the. I don't think we're going to get a bounce before I think we're just going to go to, if we're going to get a dip. Well, I don't know that we're going to go all the way down to 19.5K. Let me say that.
Yeah.
I'm not sure we go quite.
That would be pretty scary, wouldn't it, man? A lot of people would be saying it's completely over at 19 if they see the teens again.
I will be long out of any shorts by the time we get down there. If we get down there, man, I'd be just a buyer at that level, I think.
Tommy, one thing I wanted to bounce off of you, because I know that you actually have a position here, and you've been monitoring it pretty closely. We had a question in the chat. Will CRV keep sliding? Any thoughts?
I know Tommy is being fundamentally repriced to zero.
Man,
can you walk us through that? Do you have any charts you could share, Tommy? Because you've been.
I actually don't have any chart for CRV.
Tucker's got us pretty good here.
Yeah, so his liquidation price is anywhere from 24 to 28 cents. They sold more Curve over the counter to lower his collateralization rate, which lowered his liquidation price. But the CRV that they gave them over the counter, it was a 6-month lockup, right, quote unquote. It's not actually locked, and what it effectively did was double or triple the circulating supply of CRV. So it's a handshake deal agreement. What happens when you get to the over-the-counter price is it's probably going to be a rush for the exit. You're already seeing some sophisticated players already send their CRV to exchanges. I don't think it looks good for Curve. I'm going to be honest.
But Tommy, one question for you is it a literal lockup or a handshake lockup?
It's a handshake lockup.
So also they could pull back on that handshake. They could sell the spot, but nothing precludes them from heading over to their nearest perpetual futures exchange and hammering the ask to create basically a synthetic sell if they didn't actually want to get caught dumping the spot.
What I didn't understand was what people didn't like, the implications of the over-the-counter deals a few weeks ago. We talked about it on this show, right? Like when you double or triple your circulating supply, you're effectively admitting that your token is worthless. And fortunately, the market was smart enough to catch up on that, right? The demand to save the liquidation they were the shorts, and they got blown out. But organic demand, I mean, there's not any. There's complete apathy for an asset that, like I said, it's you basically admitted your token is worthless. Why would anybody buy it for any price above the OTC price that you got it at a few weeks ago? I don't know. I always kind of assumed that this was going to happen, but I'm not very optimistic on Curve holding the support. I have to say it's gonna take some divine intervention. It's gonna take some divine intervention. And I say this as somebody who, I love DeFi, so this is not a good thing. It's actually why I sold a huge chunk of my DeFi bags this week. It wasn't because of BNB, it was because of Curve. I don't know what this is going to do to the price of Ethereum and the resulting ecosystem.
You said something at the very beginning of the stream, almost kind of implying that BNB is like the Trojan horse, for CRV. Mm-hmm. Like it's the big distraction, and CRV is like, it would imply that it's inside the BNB Trojan horse, and this is the real killer, not BNB. So
part of me has been wondering that, Max, because like the market has been, at least the on-chain market, when Bitcoin dumped, it was mostly unresponsive. But what happens if ETH has a big puke? What does the on-chain market do at that point? You probably see that market be the last to capitulate alongside Bitcoin, because they've been the most resilient through this turbulence so far. And I think the catalyst for ETH puking, it just makes sense for it to be Curve. What other catalyst than one that potentially affects all of, because there are not many DeFi protocols right now, and I think this is important to consider. There are not many DeFi protocols with the liquidity to support institutions on Ethereum right now. There just aren't. Curve is one of them. I don't know. I think the protocol would be fine if the token price went to zero, but I'm not entirely sure what the implications of that would be.
Now, what happens with Aave if Curve gets nuked?
I don't know. What is AI? What does that token even look like? I haven't even.
Probably terrible, but oh gosh.
Oh man.
I don't know how.
Put the Binance chart, but without the tether at the end, and you're gonna see the entire history.
Yeah, US.
No, on Binance, because I don't know, they have some deal with trading. Yeah, and you're gonna see that it retested the prior all-time high right here. Mm-hmm. And what I think is that it's gonna lose this support that it's currently holding, fake the downside, and then it's gonna probably bump after, because
PO3.
Yeah, and it could be like the trigger for the dump could be the CRV. That's a good point.
Jackus, do you know the implications for Aave if CRV does dump?
No. I'm not an expert on that. But simply looking at the chart, and putting the dots together, I can see CRV, from what you guys said, CRV imploding. AVE is gonna fake the breakdown of this giant triangle, and it's gonna retest the weekly demand on the left that you see on the chart right here. Yeah, something like that.
Yeah.
I'm not sure it's gonna sweep the low, but it's probably gonna
somewhere in there.
It's gonna do some deviation like Link has done, and then probably pump higher, in my opinion. And if not, then it's over.
Yeah. It's funny that we are trading down at these prices because AAVE first heard about crypto. I think I was in crypto I'd found it probably like a week or two prior, and it had just hit, I think, $400 or $500. So yeah, it basically completed the run, and I heard somebody say that it had run from 50 cents to $500 in effectively a year and a half. And when I saw that, I was thinking to myself, okay, I should probably do a little bit more research on this stuff.
I love Aave, man, but I guess if they go down, they go down. I hope they don't, but we'll see.
Complacent founders paying for their sins in the blood of their tokens. But I mean, to be fair, they've been distributing their token price. They've been distributing
that was dark, Tommy. That was so dark.
Many such cases, Tommy.
Look, we had great builders. They built a great ecosystem, and then they all made it. And they all got super complacent. You're seeing it reflected in their token price.
And they took out loans for $60 million to buy mansions in Australia.
Yeah,
that could be anybody, nobody specific. Just speaking in generalities, you know.
Yeah.
By the way,
put the house down. As collateral.
What is 15-minute destroyer? What is that?
Don't worry about that. Don't worry about that.
15-minute
proprietary tech.
There's a lot of jokes I could make about that.
Hey, that's Haggard's proprietary tech. Oh man, you guys aren't ready for that yet.
Man, oh man.
You need to become a true indicator developer so that you just have the funniest named indicators, but they become like really widely accepted.
A shadowy supercoder.
Yeah.
Yeah. I don't know, man. Bitcoin looks rough.
Guys, a bit off topic to what Tucker was saying before with the pre-halvings, but it reminded me of, I've read a book about traders from like 70s and so on, and they come up with like, it's sort of brain dead, but they come up with the stuff that if you buy, and I don't know if it was NASDAQ or it was a NASDAQ, of course, back then, but SPX or Dow Jones, and then if you buy it on, for example, each Monday, that it's gonna produce the best results, right? It doesn't matter what the day was. And it actually worked for like 7 or 10 years. And they created a fund and acquired so much dollars, like multi-million and stuff. And then it stopped working. The moment they like announced, hey, we got this model and it works so well, and they acquired so much money, it suddenly stopped working. And then you've read that there was someone else, and he came and said, hey, if you're gonna buy the stocks at, between like, I don't know, 5 p.m. to 10 p.m., and you're gonna hold it in this 3-hour window, it produces the best results. And then it actually worked for like 10 years, and then again, it failed. And it seems like there are a few things I found interesting about this. One is that we think that somehow we are these super sophisticated traders nowadays, that we know it all. And then we look back, and the people back in the day, they thought pretty much as we do nowadays. Which sort of gives me hope for the future, that there will be repeating cycles of stupidity. and
There will be more cycles as long as there are human beings, right?
The appetite for gambling and risk will always be there.
And I would say that appetite is only increasing, right? When you look at young people who feel as though the only way to move social and financial classes are, for men, and it makes me sad to say this, ultimately for men, you're basically having to take very drastic measures online, often involving gambling. And for women, that involves, your bodies, right? It's a very unfortunate kind of thing that we've devolved into, but it's also a bit of the reality right now. And I think that increased desperation will only will lead to probably more parabolic market cycles. They might be quicker. I'm not sure how it's going to work, but
these are interesting thoughts, though. These are really interesting thoughts, and we shouldn't take them lightly. We've seen that during after COVID, how everyone went and gambled on the financial markets. And I think, as you pointed out well, that it's gonna probably, go exponential, this gambling stuff in the future. More quicker, more higher, and then, larger dumps probably too. Don't you know?
More volatility. I think my friend Paulie said it really well like a year ago, that there's going to be, people were saying that this is going to be a decade where we don't see any volatility. And he disagreed, because we're probably going to see, he thought we were going to see more volatility than ever. It's just going to be in a way that is so difficult for most people to be able to capture it. And if you're a trader, like, that's literally music to your ears to hear that. But if you're a holder, that's a nightmare.
And the question is, what assets are we going to see it in?
Yeah.
I think crypto has a strong chance, for sure.
Yeah, for sure.
Crypto just needs better number go up technology to bring people back.
Yeah. And I actually think that, on the topic of, the appetite of young men to gamble, it's grown exponentially, and I think it will continue on that trek. But I'm not really like a big gambler. Like, I definitely, I trade a lot, right? But it's far more sophisticated than like sports betting or something. Well, I mean, there's systems for that too, right? But you can give yourself, in my opinion, you can give yourself an edge over the house per se with a sophisticated trading system, where a lot of these, the books are stacked against you with just like casino games or even sports betting. Like, it's not in your favor, even if you do have a system. But I am, for that reason, pretty bullish on like the emergence of crypto casinos moving forward. Like RLB, for example, I think it's going to do extremely well next cycle. Like, it kind of gets fudded a lot, but it's been so like disruptive and polarizing. I mean, it works. Like, the product works and it's fun and people use it. I don't necessarily I would never like encourage people to go and use it necessarily, because I think you can lose a lot of money, if you're not careful. But I mean, unironically, like, it's going to be something like an RLB that probably is one of the best performers of next cycle, just because of the pure appetite for risk.
The narrative for next cycle is gambling.
Honestly, yeah.
Gambling on gambling.
Everybody thinks it's going to be a spot ETF. It's really going to be gambling.
That DGen Spartan quote sticks out in my brain when I think about GambleFi, where you have, and I don't necessarily agree that you have as short of a window as he says, but he says you basically have a few years after you graduate to kind of hyper gamble your way into the upper echelons of financial status. Otherwise, you doom yourself to kind of being in the system, essentially, right? And I don't know that I agree that it's just you have a few years, but I think that the general idea that you got to do it pretty quickly after you graduate definitely rings true.
I also think it's. Go ahead, Jackus.
I just want to say that I cannot wait until we start gambling on the social tokens of OnlyFans models. The next cycle.
Just gonna be like shorting and just gonna be like shorting some random person's friends tech shares.
Can you imagine if you could short somebody like an individual? Man, that'd be too mean. That'd be too mean. But I was gonna say it's also like I kind of agree with what I don't know who was it. Degen Spartan, you said, Tommy?
Yeah,
somebody. It becomes increasingly more difficult to, up your risk tolerance and your appetite for risk when you have more responsibility. Like if you get married and you have a kid, you can't exactly like behave the way that you would, as a single 23, 24, 25-year-old who's got a little bit of money. Like you could afford to lose half your net worth and it wouldn't really change your life, because you only have to think about yourself, truthfully. So yeah, I mean, I do in essence agree with what he's saying. Like before you really kind of structure your life, there's a time to take, astronomical risks. And it's when you're right out of college, probably, and you've got a little bit of money, because if you lose all of your money when you're 23 or 24, like it doesn't really matter. Like you'll make it back. You could go get a corporate job and make 50 to 80 grand a year starting, depending where you live. And like, you'd be fine, you'd be totally fine. But, you get to a certain point and you can't take on risks like that. Risk profiles shift as you mature, as they should.
Just how fucked up the system is that people are taking their college money and gambling on the markets. If you think about it.
Are they doing that? Oh man.
Like student loans?
Yeah.
Oh,
wow.
No.
Godspeed.
I mean,
yeah, like people drop out from the colleges and they go and like when I say gamble, I mean they generally like place it maybe even on Bitcoin. Like they don't even have to like start trading it or so, but like just think about it. People take out college money and then they put it on the financial markets, and that's the world we live in today.
I'm pretty sure
ETH is starting to move a little bit here.
Mm-hmm.
Happy I got that ETH short in at 1661. That's nice.
Ooh. So we're at Jesus. Yeah, it doesn't look great, but you guys about ready?
Let me
to sign things off here, or you guys want to keep rolling?
I am. I just wanted to express my thoughts with a new background real quick. It's ogre.
For now.
Ogre. I agree. Don't fade the super sniper, boys.
It's ogre until it's not ogre.
I mean, come on, man. Come on.
You wanna take us out, Tommy?
Yeah, I can take us out. We deeply appreciate everybody who tuned in today. I think we did get to 30 likes, I believe, right, Max?
Tommy, we got to 44 likes.
Wow. Ooh, y'all really came through for us today. So special shout out to you guys as well. I also wanted to give a special shout out to Jackus. Y'all make sure to follow him on Twitter. We really appreciate all your insight today, Jackus. And yeah, it was just a really fun discussion, just talking about charts and the markets. But yeah, no, just a reminder, guys, we do this show every single day on weekdays, of course, not weekends, every morning. So if you appreciate, or if you enjoyed the show and just enjoyed kind of this very technical chart based and conversation type show, we do have these going every single day. But like I said, thank you all so much for being here. If you did enjoy the conversation, even more than that, and you wanted maybe to get a look at how we're viewing the market on a deeper level, we do have links to some of our premium content in the YouTube description, as well as the link tree of our Twitter bio, because Bitcoin. But yeah, that was a bit of a mouthful. Yeah, no.
Like and subscribe.
Yeah, like and subscribe. Thank you guys for being here. We'll be back tomorrow. Stay safe in these markets. It's a little bit hectic out there.
Thanks, everybody.
See ya.
See you guys.
Always.